Welcome back to Unfoolish Investing, everybody. I'm one of your hosts, Victor.
I'm Larry.
Larry, I know the weekend's gone by. I know a lot of people have seen our short over the weekend, at the end of last week and over the weekend. But before we start on episode 17, I have a giant smile and an extra excitement. And can you guess
I
what?
think I can, because Karen Lynch has got the axe.
Karen Lynch, go fired!
Find our short.
Fired! Oh my god, I cannot, we called for activist investors to get involved with CVS. We called for Karen Lynch to be fired because she's so useless. And in a span of 6 weeks, we get the activism and she gets the can. What?
It's unbelievable. And we got a third bonus is the stock went down another 10%.
It's true. It's true.
Could
And
be an attractive buy point.
I think right now, I can't understand why over the last 5 days CVS has dropped just about 10%. The fact that Karen Lynch got fired is like, to me, I would have boosted that sucker 20% just on that news. We got rid of the worst employee in the entire company. How is that not positive? We just shaved a $20 million siphon off the books. And, they brought in the head of the PBM, which I think, is a good short-term decision because it brings stability right away. It's a known entity.
Yep.
I do favor them at some point looking outside the company for someone that might be a better long-term option to come in and fully right the ship. So I wouldn't be shocked if in a year from now, we see a new CEO take over for the previous CEO. But I got to be honest, if you're the CEO firing Karen Lynch, that to me is fantastic. Like, that's the dream job. That's the dream job because it can't get any worse. It can't. She was so bad.
Yeah, I mean, it's like Seinfeld. I would do the opposite. Everything she did was wrong. It was like everything she touched, instead of turning to gold, turned to crap. So definitely the right move. It took too long. I think CVS waited too long. Her taking over the Aetna business personally was a very clear, last-ditch effort to save her job. And then they didn't give her time to do anything. I think they just heard enough pressure from activist investors and, maybe the media that they were just like, you gotta go. And I agree with you about the new CEO joiner from the PBM. That's one of the shining lights for CVS right now is the PBM business. Going through some changes, but at least they're making money. The retail and the PBM are doing pretty well. Aetna Health Insurance, whole different story. I think it's a good bridge. Maybe a year or two, like you said, to kind of right the ship and stabilize things. And then maybe there's a long-term CEO search where I'm voting for Brian Nickel. He fixed Tex-Mex fast casual. He's fixing coffee. Just come fix one of the most complex issues in America right now, which is health insurance.
Oh, did you just call out Brian Nickel?
Yeah.
The new CEO of Starbucks?
He's the company fixer. This is
Um
just go find a broken company, hire him, boom, everything's fine.
okay. Then if we're putting out Hail Marys, right? If we're putting out Hail Marys, I'm gonna say we're going John Legere.
Okay.
You
That's
fixed
T-Mobile, right?
you fixed the cell phone industry
Yeah.
by taking T-Mobile from absolutely nothing to something. Why not take on healthcare? You could take on Mark Cuban, and who wouldn't want to see you two go head to head month after month, quarter after quarter? I know I pay for it. So John Legere, if you're
Yeah.
watching, a year or two from now, CVS, pharmaceuticals, healthcare, it's where it's at.
Yeah, I mean, they just, I don't think a healthcare executive is the right answer. Long term, I think, I do think they need somebody with a little more retail focus. Um, and then maybe have some healthcare executive, at the bench, on the bench level. But they could use a visionary CEO like we've seen in so many other companies. So
You
good
know
news.
why else I like John Legere?
His hair?
He's a UMass guy. He's a
I
UMass
didn't
guy.
know that.
So, he went to school in the New England region. Why not come fix a New England company? So,
Come back home, help.
and for any unfoolish investors out there, I will say we are at 2013, 2014 levels right now with the stock. So before we move on, it is a fixable company. Um, you have to be patient. And if you're looking for an in, I do think these levels right now offer that opportunity. But you have to be patient. And when I say patient, you have to look out 3 to 5 years. You have to give this company a chance to right itself, turn itself around, brush off the Karen Lynch on both sides, because she's everywhere. She's everywhere.
Yeah.
She's so bad. So bad. Like, I don't know how that lady gets another job. Who would hire her?
Well, I mean, the good thing for her is she doesn't need another job because she's a multi-millionaire and can just coast on what she's already made and probably get on some cushy board position somewhere and do nothing.
Spirit Airlines. Do you need a CEO? You're going bankrupt. You might as well, take a CEO that's an expert on the bankruptcy world. But, yeah. So, if you're looking for an in, right here in the 50s, is a great opportunity. Just be patient. Just be patient. Solid company. I'm hopeful that it's a solid turnaround story.
And if you want to talk dividend too, it's at the it's so low that it's a 4%, over 4% dividend yield.
Four and a
If
half,
you, yeah,
4.57.
okay, 4.5, okay, yeah. If you can put the time in to park your money there, the dividends just kind of a nice to have.
Agreed. Agreed. And on that note, you ready for this week's episode?
I couldn't be more ready. I've never been more ready for anything.
Episode 17, folks. That's right. Today we are talking about top renewable energy stocks and ETFs. That's right. We are going to be diving in to the rapidly growing world of renewable energy. As the world continues its transition towards clean energy, investors like ourselves are eyeing this space as long-term growth opportunity. In this episode, we're going to break down the latest earnings report of the top 5 renewable energy stocks and discuss their potential future. So whether you're already invested or just thinking about it, stay tuned for some actionable insights. And on that, Larry, let's jump into the first one. I think we're both investors in this one. And that is NextEra Energy. NextEra is a company often seen as the king of renewable energy, especially when it comes to wind and solar power generation. What are your thoughts on NextEra, Larry?
It's been nothing but a growth story for them for what seems like forever. They were born out of a traditional utility and they kind of spun off the renewable side of it to form its own company. And, they've been adding capacity for years. And I believe they have over just about 60 gigawatts of capacity now, which is huge. I mean, if you don't know anything about energy, it's a boatload of energy, a lot more than 1.21 from Back to the Future. Um,
1.21,
yeah.
or was it
Um,
gigawatts?
I think it's supposed to be gigawatts. Um, but anyway, go watch Back to the Future if you haven't seen it. They're in wind, they're in solar. They do own plants in traditional oil and gas, but I think they're primarily renewable focused, and they do have a small nuclear presence, which I wasn't aware of until we started talking about this stock again.
I
So I think
believe they
it's a good
own
long
the.
term own.
I believe they own the Seabrook nuclear reactor in Seabrook, New Hampshire.
Oh, okay, all right.
But next error on their Q3 earnings call, their numbers came in really strong. They had reported earnings per share of 85 cents, which beat Wall Street's estimates. And revenue for the quarter was 7.3 billion, a 9% year over year growth. So for me, that's a significant portion of that growth came from NextEra's focus on expanding its solar and wind farms. You know, I'm loving that growth. 9% year over year. I take it. What are your thoughts?
Yeah. I don't think it's not going to be a like superstar growth story like a Nvidia or what we're hoping SoFi might become. Um, it's going to be a stable. The further out you draw the chart, you're just going to see a slow growing performer. And, you can't hit a home run every time. Sometimes you just need to hit a couple of singles or a double and play it on the safer side. And I kind of feel like that's what NextEra is.
Yeah, I mean, for me, I'm looking at them as they're not really just leading in renewable energy, but they're also pretty much setting the stage for what the entire sector could look like for the next
Yeah,
2 decades. And for me as an investor, that means a mix of growth and stability. But again, to your point, this isn't a tech company. Don't
right.
look for the ridiculous growth, but you have to have a diversified portfolio. Would you agree?
I do. And again, I don't want to harp on dividends too much, but if you've got a long time horizon, I believe it's a little over 2%, 2.4% dividend quarterly. And, I'm an advocate of just reinvesting dividends in the stock that you're owning. Um, just let the dividends reinvest and watch it grow.
Yeah, because I mean, NextEra is pretty much aiming to increase the renewable capacity that they're currently doing by over 20% the last time I checked, over the next 5 years. So I feel like that's a strong commitment to any green energy fans out there at cutting carbon emissions, along with, they continue to sign long term contracts
Mm-hmm.
for renewable projects, which again makes them look even safer and more stable in the long term. So if you're looking at just one stock to get into the sector with, for me, NextEra is probably it, and it's the main
Yeah.
reason why I think I'm in there.
Yeah, I would like to see them. They've really been focused on generation. I do think that they have an opportunity to kind of get a little more multimodal and go into storage, battery storage. Um, I think that could be a good opportunity for them. I don't think they're really big on it yet. Um, but I think they're going to as, you see the current US power grid is kind of, I don't want to say failing, but um, we're going to be creating all this energy with all these renewable energy sources. We need somewhere to store it. And the logical case right now is battery storage.
Yeah, I mean, it'd be interesting to see whether or not whether or not they did it themselves or were able to partner up with battery manufacturer
Yeah.
to try and get that done. But I
Yep.
agree. Next up on our list of renewable energies, Brookfield Renewable Partners. Um, they are one of the world's largest publicly traded renewable energy platforms. In their latest Q3 earnings, they had a slight miss though. They only brought in, and again, it's crazy when you talk like billions. They only brought in 1.15 billion, but they were able to maintain profitability. So even though they have a revenue miss, they're still making money, which to me is always a positive for a company. My concern is typically with a lot of these companies is if they're missing and losing money, but slightly miss and continue to maintain profitability. I love that. The company continues to invest heavily in hydroelectric, which is a little bit different than what NextEra is doing, as well
Hmm.
as solar projects globally, focusing on emerging markets, mostly in South America and Asia. So it kind of gives you that diversified global touch where you don't see NextEra playing with their projects outside the US or outside North America a lot. Do you have any thoughts on Brookfield?
Yeah. If you look back the last 20 years or so, they've increased their dividend by an average of like 6% per year. Um, the dividend's hovering right around 5%. Um, so they have, to your point about only making $1 billion, um, they are making plenty of money and they are reinvesting in their own business and they are paying some of that out to the shareholders every quarter. They've raised the dividend for years. I think this is a pretty safe, stable company that you can park money in and, kind of just enjoy the dividends.
Yeah, and I think that you know, to your point, paying that strong dividend is to me free money. So
Yep.
even if and this is the key thing that you'll see a lot on Foolish Investors, if a company's paying a dividend and it's a good size, um, and they're profitable, it's almost like guaranteed growth. It's almost like you're locking in that growth on your money at no less than whatever the dividend's paying for the year. So if the stock continues to go up and the dividend continues to shrink, yeah, you might be getting a lot less, but you're still making money on both sides. And
Right.
that's why I love having dividend stocks in my portfolio. I don't have a lot of them, but the ones I do, you know, they may make me a little over $1,000 a year, but for me, that's free money. Free money. It's like a savings account with a high
Now,
yield.
what's your strategy? So I know I talked about how I generally just reinvest the dividends automatically in the stock. Do you do that, or do you have it cash out and then you just use it to buy stock that you might like at the time?
It all depends. If I don't have um a large stake in the company and I'm continuing to grow, I'll reinvest the dividends back in.
Hmm.
But if you take something like but if you have a large stake in the company, like for me, SiriusXM pays a dividend. But I have so many, thousands of shares of SiriusXM and I've had them for an extensive period of time. I stopped investing the dividend back into the company because I'm just like, I had more buy positions in dividends at one point than I did the other way around.
Oh, yeah.
And I was just like, you know what? I'm just going to take that money back. So it really, for me, varies based on one, how I view the stock, and two, how much money I already have in the stock. And if it's
Hmm.
15, 20, 30% of my portfolio, I'm not putting more money into it. I'll just take that money and I'll put it into another, I'll put it into like QQQM or another stock that I know will just continue to balance out and grow.
Okay.
Third up on our market right now, First Solar. And for me, First Solar is a company that's constantly innovating in the solar panel technology space, which for me is critical because I would love to get solar panels, but I need them to generate a little bit more electricity to be able to supply the amount of electricity my children put out. Looking at you, kids. First Solar's Q3 earnings with an EPS of $1.85, which beat analyst expectations by a wide, ridiculous margin. Revenue was up 25% year over year, coming in at $3.1 billion with a B. The company is benefiting from strong demand in solar panels pretty much everywhere, especially with the new tax credits for solar projects in the US. I mean, First Solar is killing it. Any thoughts, views on First Solar, Larry?
Yeah, I mean, you can't really sneeze at a government incentive. Um, and right now the government is really heavy into pushing renewable energy in general. Solar is probably the most accessible renewable energy source. Um, you know, and the best way to get to that is solar panels. Um, so you can't really, I don't think you can really go wrong with the heavy hitter of the solar panel space. As long as the government is pushing renewable energy, I think, First Solar is probably going to be fine.
Yeah, I mean, First Solar, to your point, is so well positioned to capitalize on the continued growing demand. I mean, unless the sun goes away,
Yeah, we got bigger problems if that happens.
we have so much bigger problems. I feel like First Solar is going to be a great pick for investors looking to ride the solar wave for the long term. And again, Unfoolish Investors, what we're looking at right now is a variety of different stocks. Pick one or create a basket, a little smorgasbord of your favorites. Put them all together into your customized ETF that you have in your portfolio. And that's how you kind of play the sector and mitigate risk. Because one of these companies may have a bad quarter, but the likelihood of all of them continuing to go downward, I think is pretty astronomical. Something else probably came on if it's crushing an entire sector. For me, First Solar, one of the core things I love about them as an investment, massive, not small, massive backlog. And that backlog comes with government incentives. It's like, if you have
Yeah.
a backlog and you have government incentives, that is a win-win for any company.
Yeah, I mean, to your point, those are two. One of those alone is a good sign. When you've got two of them, um, it's a pretty good moat.
Next up on our list is Enphase Energy. Enphase, Surprise. Another key player in the solar energy, but storage, solar energy storage, and micro inverter technology. So, where we were just talking about, hey, maybe Nextera could be working on storage. Here's a potential partner for you. Enphase reported its Q3 earnings. They slightly missed expectations with revenue around $720 million. However, the company's growth in its storage segment was the key highlight. As more consumers seek reliable ways to do what, Larry?
Store their energy.
Store their solar energy. Exactly. I mean, you know, I don't know if I see a surprise. Would I be shocked if I saw a merger between these two companies? Because Nextera and Enphase definitely complement themselves in a variety of ways and would allow for one another to grow, but as a stronger entity. Because now if I'm, you know, got the solar panels, got the storage devices, everything kind of goes together.
Yeah, definitely some synergies there, that's for sure.
Enphase's focus right now is on residential solar storage, which is, for me, I think positions them well for growth, especially for homeowners who look to add solar and storage systems. And I feel like a lot of people only think of battery storage in Tesla. And they're not aware that there are other companies out there that are actually in the sector, and this is actually their focus. It's not just like something else the company does. This is their focus. And for me, Enphase continues to expand. You know, right now I feel like they have a big target on Europe and Australia, which I'm not sure if you've heard. Australia has a lot of sun. Um, for all you Australians watching, um, and they're currently growing increasingly with solar adoption. You know, any thoughts on Enphase?
Yeah, like you said, they are Tesla's main competitor in the, residential battery storage. Um, I think that's a huge opportunity, really, for both companies, I guess, Tesla and Enphase. Um, as the power, we have an aging power grid in this country. I talked about earlier in the video here. I do think the future is a lot of these sort of microgrids where everyone is just kind of feeding off the grid, keeping their batteries full, and then discharging the batteries when they need to. Um, as the power grid becomes older and maybe less reliable or more strained by higher capacity. But um, I really think there's a growth story to be had in the residential battery storage space.
We only have three more things to go through, Larry. Three more, so we're getting close to the end. And for me, up at the number 5 spot is Sunrun. Sunrun's Q3 earnings report showed a 20% year-over-year increase in customer growth, with revenue reaching $590 million. The company's solar as a service model has attracted thousands of new customers, especially in states like California and Texas. Now, if people aren't aware of solar as a service model, correct me if I'm wrong, Larry, and I'm wrong often, but not about Karen Lynch. I was right about that. Just makes me smile. Solar as a service company comes along, puts solar panels on your roof free of charge. Correct?
That's what it sounds like to me.
And by doing so, you pay them as your utility a small amount compared to what you would pay, say, Eversource or PG&E or another utility that's out there. So you would be paying Sunrun, they're collecting it, and then any excess they get, but essentially, um, it mitigates the amount of power that you're actually needing to pull. And with fluctuating, utility prices, I find that a lot of people seem to be saving a lot more money without having to put out the expense of buying their own solar panels, but still cashing in on some of the benefits of renewable energy.
Mm-hmm.
You know, thoughts on Sunrun?
I like the idea. I don't own Sunrun. Um, it seems like it's a capital intense model, because they have to front all the money for the panels they install, and then they get it back slowly over a period of years, plus the utility cost. Um, so I think I would invest a small amount in a extremely long term position with them. That's probably like a 10+ year hold. Um, but I like the concept.
I agree. And I think for me, it's more about if you were going to invest in a utility that you might not hate as much because of what they do.
Yep.
I kind of look at Sunrun more in the utility sector
Yeah.
versus Enphase, which is in storage, or Nextera, or even which again is more utility, but not quite at that a lot larger, or First
Mm-hmm.
Solar. So again, I'm not invested in Sunrun either, mainly because I'm a bigger believer of Nextera right now. I feel like
Yeah.
they're pretty much everywhere and they're a little bit more stable. But if you were gonna put together that smorgasbord of renewable energies with these five stocks that we just mentioned,
Mm-hmm.
this would probably be my smallest percentage out of all of them. And that's just
Yeah.
because,
I would agree with that. Yeah.
of the direction it's going in the longer period of time. Um, as coming up next, if you don't want to create your own basket, and a lot of investors don't, um, that's why we got ETFs, index funds, out there. And for me, if you're looking for clean energy stocks with the easy set it and forget it mentality, I feel like look no further than iShares Global Clean Energy ETF. Uh, you know, it's had an amazing year this year, though. It's up 18% year to date. For me, the ETF provides exposure to the diversified portfolio of massive amount of global companies involved in the production of clean energy. And some of its top holdings I've already mentioned. Enphase. Other companies that I own, I'm not sure if you do, Plug Power,
I do own
and
Plug. Yep.
and another one, Vestas Wind Systems. Um, Again, if you're looking for both large cap established companies with small and fast growing firms, I feel like iClean, stable, safe. What are your thoughts on iClean?
Yeah. I like the basket idea. Um, I don't like the expense fees for some of these ETFs. This one's not too bad at 0.4%. But if you're committed to having a portfolio segment of a bunch of renewables and you're not sure which ones to buy, then I think this ETF is the best bet.
Yeah, and I think right now, if I was going to buy into renewable right now, I would probably wait. I would probably wait until after the upcoming elections, just to have a better idea as to,
Yep.
the mentality of the next person coming in and their views on renewable energy. I'm not saying one way or another, but a sector like this could definitely be impacted in the short term based on something as small as an election. But
yeah,
when I look at iClean, it hasn't been around for a ridiculous amount of time. And I think that when you're looking at it has been around for I always say better part of 5+ years. But at the same point, I think that renewable energy as a whole is finally starting to come into its own. And I kind of look at it, and work with me on this pivot, Larry. I kind of look at it like IMAX. Are you aware that IMAX, yes, the large format movies company, started in the 1960s?
I was not aware that it's been around that long.
And I feel like that is kind of how I'm looking at the renewable energy sector. It's been around, but I feel like it's waiting for its moment. And we talked a little bit before this podcast. I think AI is the moment. And if you look at the amount of energy AI produces, I think you're going to see the demand for renewable energy of all sorts. Plus, you're already starting to see all the big, tech companies get into nuclear. I think you're going to start seeing clean energy resurgence over the next decade that is truly going to shift our grid on so many levels. I think the downfalls that our grid sees today will be minute 10 years from now. Not completely gone, but I think a lot more minute, because I think you're going to start seeing a lot more renewable energy and nuclear coming in and saving the day everywhere.
I hope you're right. I think renewable is the future. Whether people want it or not, this is what we need to do for multiple reasons. Economically, for the climate, etc. And I think it's going to be a multifaceted approach. The sun's not always out, the wind's not always blowing. But a nuclear reactor can always be on. So I think that's the kind of the synergy is, you try to focus most of it on true renewables, which I would call solar, wind, and I've seen some dabbling into like ocean tidal harnessing, which I think could end up being pretty big. And then nuclear is your more traditional. We're always going to have the capacity, whether when the wind's not blowing, when the sun's not out, etc. So I agree with you, and I hope that the stuff that's impacting the power grid today is an afterthought in 10 years because everyone has access to renewable energy. They have their own battery storage. Everyone's kind of on their own microgrid.
I agree. I agree. You know, there's one company that I forgot to mention that I am also an investor in, and I've been following this company for years, and I've even tried to get one of these put into my backyard. For some reason, I'm not allowed to have a fuel cell in my backyard. And that's
Can't
Bloom
imagine
Energy.
why.
Bloom Energy. I look at Bloom Energy and I love it. And I feel like if I could hook one of these things up to my entire neighborhood's grid and just be done with it, I take a couple of these cubes. And for anybody not familiar with Bloom, they create solid oxide fuel cells, right? And they put them into these cubes that they call Bloom cubes. And if you ever seen a data center from big tech, there's a good chance you're going to see a Bloom cube hooked up somewhere around that data center because they all have them. For me, I can't, Bloom takes natural gas and converts it into hydrogen without the combustion. So it makes it attractive for companies looking to reduce their carbon footprint. And the amount of energy, so if I did the math correctly, I factored in the two Bloom cubes could power 100 homes, right?
Okay.
So if you found 100 homes that you could get kind of like create microgrids, if we're going to call them that, you could take them off the dependency of having their own utility by just hooking them up to a natural gas. So you got to pay for the natural gas, but essentially all the, hydrogen that it creates, it's going to power 100 homes. But living in New Hampshire, what I discovered, utilities aren't allowed to generate electricity.
Oh, interesting. I didn't know that.
So I asked them once, and I was like, why don't we have Bloom cubes hooked up to our grid? And it's because of what they do, which to me is insanity. But I really do feel like outside of nuclear, solar, wind, I really feel that hydrogen is the future and a solid push towards, probably one of the more sustainable, renewable energies. And if you're looking for a stock that could do this, I really do think Bloom Energy is that stock. I just think you have to be patient. I think you have to understand when you get into a company like Bloom Energy or even Plug.
Yeah.
This isn't rewards after a year or two. This is Nvidia for the energy sector. This is something that you may have to sit on for 16 to 20 years. And then one day, it's going to go to the moon. But you got to wait.
That's gotta be a short. It's gotta be a short. If this doesn't end up as a YouTube short, I don't know what should be. Because you just called it the NVIDIA of renewable energy. And the graphic is NVIDIA colors, and you're wearing an NVIDIA green t-shirt.
I still don't understand how Nvidia is doing what they're doing. But yeah, I do think that Bloom has the potential to be the Nvidia of renewable energy, where if you hold on to the stock, have a small position, and you're patient, it's going to hit one day, and the only question is when. not if, when. And I'll leave you with this. One wise investor once said that Nvidia, not see now you got Nvidia in my head. Bloom one day would be a massive acquisition target. And it's because of their cubes.
Okay.
And again, I'm not sure if they're gonna at this point still do that, but I'm watching that stock, very small drip into it, buying it on the regular, and just thinking 15 plus years out. And patience. Any thoughts on Bloom? You good?
No, but I will throw out a quick, you know, home run stock sector potentially is uranium mining. Um, with this push toward more nuclear, which, we basically spent the last 15 years trying to like de-nuke the power grid after the Fukushima disaster. We're kind of reversing that trend now. Microsoft is going to buy power from 3 Mile Island. I think Google has some sort of
Pause
partnership
on
to
that for a
make.
second.
Yeah.
Did they not think that it might have been a good idea to rebrand the island?
Yeah, they really should. Yeah,
Like,
I agree with you.
we're
Call it
opening up a
anything
new,
else.
like, call it Clippy or something. Clippy Power. Something. We're
Yeah,
reopening 3 Mile Island. Great idea,
yeah,
Microsoft. Let's keep the name of the worst nuclear problem in the United States history.
yeah,
I don't know who's running your marketing department.
yeah. Maybe they're getting it at a discount because the brand is so tarnished.
It just means crazy.
But I mean, I've personally been an investor in a stock called Denison Mines, ticker DNN, for about 4 or 5 years, and the stock's doubled plus a bit. Actually, I think it's almost 3x since I bought it. I bought it like 85 cents. Um, it's not going to be
Hold it. Let's pause that. 85 cents?
yeah.
This wasn't like a Dogecoin, was it?
No, no. This is the real deal. I'm not talking about crypto. I don't advise. I'll say I own crypto. I don't advise other people own crypto. Um, it's a
So
very risky investment.
so Denison Mines. Let's see.
Yep.
Interesting.
2 billion market cap. It's a small cap. Um, I bought it when their market cap was less than half that. It was under $1 billion. They've got some really good, uranium mining. They've found some new sources the last couple of years. They've also benefited from, the recent changes where, we're trying to like get back into nuclear energy a little bit. So like a month ago, the stock was $1.50. Now it's at $2.29. So it's gone up quite a bit on the news. And if these corporate, the corporate sector is really driving this push for more nuclear energy because of, I think, to your point about AI earlier, they've got to find a way to create the energy to power AI, and then B, not have it be a pollution hazard. And I think nuclear ties into that pretty nicely.
I'd agree, and I'm going to have to look a little bit more into uranium. I don't think I missed the boat on this one, but if you were ever going to sell uranium stock that you probably bought on the cheap for a couple bucks, all the big tech plays going into nuclear probably gave you that out.
Yep.
Um, on that, I want to thank everybody for listening to this episode of Unfoolish Investing, where we talked about the happy demise of Karen Lynch. Can't stand you. Glad you're unemployed. and renewable energy stocks. And some of the best ways to play them, whether or not it's individual stocks, creating a smorgasbord of your own basket, or an ETF. And if you want to be like Larry or Doc from Back to the Future, you don't have to go to the Iranians to get your uranium. You can actually buy stock in it. This is phenomenal. Things I learned, especially from you. This is awesome. So if I ever want to go back to the future, I now know how to get my supply. It's publicly traded. And on that note, hit like and subscribe. If you have any questions for us, unfoolishinvesting at gmail.com. Until next time, stay unfoolish.
See ya.